Hello guys, and welcome to the 83rd edition of the Trading Opportunities webinar. Give me a few moments while I check microphone and other setup related things. So looks like we are live and yes, the audio is working fine at my end. So guys, welcome to the 83rd edition of the Trading Opportunities webinar. This is your host Nirav, and before we proceed with the webinar, let's quickly get done with the legalities. Here on screen is the disclaimer. Suggesting all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any other purpose, then you yourselves will be liable for your profit loss or loss of profit. And with the legalities out of the way, let me give you a very quick introduction. So, guys, as you know, my name is Nirav. I'm the admin and owner of the website 50eyes.com, as well as the YouTube channel 50 Eyes Market Analysis, where we are currently going live with this broadcast, as well as my LinkedIn page. And this will be the 83rd edition of the Trading Opportunities webinar. In the previous 81 webinars, we have captured 138 trades. Of course, all of them discovered and not necessarily discovered, but all of them discussed live in front of you in these live webinars, which I conduct every Friday at 2 p.m. GMT. Right. So if you want to join in live next time, if you are watching this as a recording, we go live 2 p.m. GMT or 7:30 p.m. IST. So whichever time zone you are in, just convert it. Right. So with that being said, I'll just continue with the introduction. I'm also the author of the book Think with the Markets, which is available on Amazon's electronic book delivering platform Kindle. So in case you are interested in reading more of my work, you can just head there, or you can also check one of my courses. Continuing on, here is the forecast accuracy that I always like to show before beginning these webinars. Since I've been doing these webinars and uploading videos on YouTube, I have kept a track record of whatever I say since 2016. The accuracy has remained higher than 80%. As you can see, 83.34, 87.5, 2017. In year 2018, it was 84.61. 2019, it was 84.88. 2020, 88.52. And 2021 82.22. You can just scroll down and check the date the webinar was done, the name of the instrument, and what was said about the instrument, and the video link is here. Right. I do keep in note, after 2021 I've been conducting weekly webinars, so it's hard to keep a track of all these things. So there is a compilation for it, but we haven't kept an official track record of it, other than the number of trades which worked. So with this 6 years of consecutive track record above 80%, it is above industry standards. That's just what I wanted to point out, as written here. Lastly, with the webinar, we generally go with the progression of discussing Euro USD, followed by crude oil, gold, S&P, Nifty, and then in the end we discuss Bitcoin. Of course, if I have any live trades going on, or if I take a live trade during the webinar, which was the case in the last webinar where we took a live short trade on gold, which was closed before the end of the webinar. So around 18 minutes into the webinar, we took a short trade, and around 50th minute, we closed the trade. So of course, we'll discuss that. And of course, if there is any trade which I would like to point out from the Slack group, I'll also discuss that. Right. With that being said, one last important thing. Tomorrow we will be doing the Profits Revealed webinar, which will be conducted at 2:30 p.m. GMT and 8 p.m. IST. It will be exclusive and privately held. We will be discussing how I was able to achieve the 50% profits within less than 3 months on this account, which I'm currently handling, and we will be checking the broker statements, details, etc., etc. Everything will be there. So if you are interested in checking out all those details, do register, because you will be sent a separate login link and details, etc., only after registration. So that's about it for the announcement and the introduction. Now let's head over to our actual charts. So I have a short trade on crude oil. So I'll discuss it perhaps later when we discuss crude oil, but let's begin as we always do with the Euro USD. So in Euro USD, what we discussed last time was 1 second. Yeah, so what we discussed last time in Euro USD was the fact that there might be a continuation for the wave X, or it may have completed. So let me just first quickly check out the date of the last discussion. So it was 29th September. So let's just check the price around that time. So the market was somewhere here, and during our discussion, it was somewhere here. Now, discussion, as I recall, was simple enough. The discussion was basically that we are in, or we had completed a W, followed by an X, followed by a Y. This was the pattern which we had finished at that point in time. This was the Y, by the way. Hey, Luis. Good morning to you. And 1 second. So yeah, as I was saying, this was the discussion which we did in the last webinar, that the Y is complete, right? Now the analysis came afterwards was that either we will have another wave up for an X, which will then be followed by a new leg down. So the idea was that if there is a new leg up for an X followed by a new leg down, then we can take sell trades below this low of 1.04893, right? And the second idea was that if the wave Y was the end of the correction, which is what you will call a double zigzag correction, then in that case, the market will just go up and not break the low. This was the main idea of the whole analysis. You can, of course, check the whole thing yourselves by visiting YouTube channel 50 Eyes Market Analysis and hitting the live button here and checking the 80-second webinar. All of them are time stamped, by the way, so you don't have to search anything. You can just scroll your mouse over the timeline and it itself shows where is euro, where is gold, crude, etc., etc. Right. So that's about it for our last. Yeah, there is a screen of last discussion around 8 minutes 55 seconds, and you can see this is the exact analysis we were doing in the last webinar. Right. So coming back to the actual chart now, it has played out. It has shown its hand right now. Right. We know at this point in time that it is indeed following what you would call a triple zigzag correction, and on the rough right hand side, I'll just show you. This is what it is following. X will be followed by another leg down called Z. Right now, this current analysis, this wave X does not always look that simple that I can draw it like I have drawn it like this. This is called a zigzag, but it's not always that simple. So let's look at what it really is doing in this particular case by visiting my second count here. Not really count, my second chart here. So as you can see on the second chart, what we have over here is the starting of the wave X from this point of reference. So this is this point around the price of 1.04875. This is where we are starting to count the wave X, right? So wave X in this case seems to be having a ABC, possibly a flat kind of correction. Of course, other possibilities are also existent, and I will discuss them one by one. But for now, let's start with the simple thing and build on top of it. So first of all, if this wave X is a flat correction, then a flat will be having something like this kind of a structure. First leg up or this leg is called an A. Then the next leg down is called a B, followed by a C. As soon as the C is complete, we expect a downward movement, which will take out the low of wave B, right? So far, it looks exactly like that. And the C also looks like a ending diagonal to me. So, and generally, we would like to see a faster movement comparatively. So we have also seen a faster movement compared to this whole price series, actually. So it is in alignment with the flat kind of count, and the diagonal also seems to be working out. So based on that, the idea is that if it really is the X complete over here, then we can expect some pullback, maybe into the 50-60% retracement zone or 50-60% price retracement. And once the market has retraced 50-60, we may expect some leg down or price movement in the downward direction. So this is the general idea right now. And how will I play it? There are actually two ways to play it. The most conservative way is to wait for this leg down and then this leg up to complete, and then let the market take out the low or go at least near the low. So in this case, the low is around 1.04812, and as you can see, my alert is at 1.04935. So this will be the conservative way to play it. Let it do all this, right? And then once it goes near the low or takes out the low, we enter short. Of course, the target will be below 1.04483 and lower levels. But this is the first, or let's say the conservative view of how to play it. Second view will be that once the market reaches this resistance zone, which is around 1.05353, basically somewhere inside within this white box, then we will start to look for possible reversal signs. That does require a bit detailed knowledge of Elliott Wave and how to raise price and charts. So if you have the understanding, then of course you can look for these levels. They don't always play out precisely. Just keep in mind that there may be a spike above, there may be a movement above the box and then reversal. So variations will and can happen. Mostly variations do happen. Right. So this is the setup. Waiting for sell. Both ideas have been discussed, and next thing is how much far the leg down can go. Now, since we have been counting, this is the original count. Let's go a little bit higher time frame. Let's go 1H. So since we have been counting, this is the WXYXZ, and this is the W down. This is the X. This is the Y down, and this is the X. So this is going down for Z. Now you can do a couple of things here. If you really want to find a target, you can go for W and then Y and then project the length of W here and check the length of Y, whichever is lower, you can take it as a target. But I'm not really going to go with all that stuff because the fact of the matter is this is a wave Z, which is the end of a correction of a complex nature. If it really is the right count, then the wave Z is not really required to be very big at all. And in these cases, it may very well not be a very clear structure. It may just be a fast leg down, maybe even a spike, and then maybe it will just reverse. That's just something that can happen. I'm not saying it will happen, but all I'm really saying is that technically and in my understanding, I'll just be happy to trade it and see it go a little bit lower than the low, that is achieve the minimum target. That's all. Remember, this is the end of a corrective structure, so caution must be taken here, or whatever is the proper English, right? So I'm not gonna go into targets. If I do have something here already, I'll just check it very quickly, but nothing very specific. I'll go not much here. So that does conclude our discussion on Euro. Waiting for sell. I've discussed the whole setup itself and the reasoning and the entry strategies, right? I would like to check at this point if I had any trades put on Euro. Not really trades, I think, but we did have yes, Euro. I wasn't very active, so but these were the analysis posted. I was more active on crude oil, which I'm currently in a trade on right now, as well, by the way. So this was analysis posted 1 day ago, or basically yesterday, and the price was around 1.0520. Let me just show you. So this is a post made in our private Slack group. The idea was the market will go higher with this green kind of line. Not kind of, it is actually green. And later on, as you can see, 1.052 was here. The market did go up precisely like that. Now, this was not just the only instance. I was actually tracking S&P, and it was really following the whole count. As you can see, this post was made on October the 4th, and we were expecting that the market will go outside this possible wedge formation, head up, and then possibly give a correction. Now, what happened afterwards is the market did go outside the wedge formation, Yes, and whatever happened afterwards, you already saw on chart. So I've been following Euro as well, but not really actively trading it. And our analysis is working very fine. Now let's head over to our next chart, which will be the chart of crude oil. Yeah, by the way, guys, in case you are following these analysis or even if watching for the first time but finding it useful, I would request you to kindly share this content with your friends, colleagues, and anyone else who is into trading. That really helps us expand the reach, and it is really important because we are on the 83rd webinar, but the following is not as it should be for this much continuation of efforts. So your goodwill and good intentions are really required here. So with that being said, let's now head over to our chart of crude oil. So in crude oil chart, we were, I'll just discuss the trade I'm in right now. So this is the trade I posted on crude oil. I mean, I entered and then posted. This is the short entry. It is very fast. So I have added some shorts as the market did some progression to the upside. That is, it went and gave a pullback, right? So somewhere here I entered the shorts, and then as the market went up, I have added some more. The idea is basically that it should take out the low of 81.76. Now, what is the count we are following? Let's quickly look at that so that we can have an understanding of why I'm doing what I'm doing. The count we are following. Oh, yes. This is something we discussed in the last webinar, which has played out. So I'll just quickly show that. So this is the recording from the last webinar, the 82nd webinar, as you can see over here. And this is the discussion on crude oil. Let me see the point which I'm really specifically interested in showing here, or the point of interest, or let's say importance. Yeah, there it is, the red trend line. So our analysis, as you can see over here, which I marked in the last webinar with the yellow arrows, is that once the market breaks the red trend line, I'll be interested in shorts. And that is exactly what we have been doing ever since the market broke this red trend line. I have entered shorts and then shorts as per the discussion. Where is the Slack group? As per the discussion in our last webinar, basically. So just let's quickly have a look. As you can see here, yesterday also I entered shorts, booked profits on shorts. It was, I think, a very short-term trade, 12:39, 12:59, so only 20 minutes long. And then I've been following the count and entered shorts today. Let me check what has happened. So we had an alert on gold. So we'll check it when we reach gold. So as I was saying, our idea in the last webinar was that we will look for selling opportunities below the red trend line. The market has given us multiple selling opportunities, and our target minimum was between 85.5 to 83.76. So even our target of 83.76 has been taken, and the market has continued the downward movement even after that. Right. So now let's see what the bigger picture count is. You can, of course, head over to one of the past webinars and figure out the complete analysis. But long story short, we expect the count of impulse from here. Again, updates might be done here. Things are not concrete. If I feel that this is not working out and something better is, or not better, something else is happening in this market, I will update the counts accordingly. But what it looks like is we have an impulse in the upward direction. Once the impulse is complete, we expect a correction in the market. And the correction is what we are seeing right now. Right. So with the corrections, we generally expect a minimum 3-wave downward movement. Now let's look at the correction. I have counted it a little bit aggressively in this bluish looking count, or actually the CN count, and then counted it a little bit less aggressively in the orange count. So as you can see here, we have let's just go with the orange count first. We have the W here, the X here, and then the wave Y will have 3 waves inside of it. The first leg down will be called an A, next leg up is called a B, and then the next leg down is called a C. So we have what you call here the A, the B, and then the C is continuing lower, right? So that is our count. I'll actually just show you by removing everything. Show on stream, right? So I don't know how long this has been happening. Hello, hello, hello. What the hell happened here? Is the red trend line. So our analysis, as you can see, so it looks like we are back online. We went out. We have what you call here the A, the B. Okay. So there was seemingly a 1 minute cutoff of the webinar. Not sure why. I'll probably have to check that later on. But anyways, let's continue. Hopefully we are broadcasting fine at this point. Okay, so someone has also commented that we are live right now, so that's good. So let's see. Yes, thank you, QC John, if I'm pronouncing it incorrectly, sorry about that. So thank you for the confirmation that we are currently live. So in that case, let's continue. And in case there is a cutoff, definitely let me know in the comment section as well, although I'm keeping an eye on a secondary device. So yes, as I was saying, we were discussing the WXY in the downward direction, and I was saying that we may be in the wave C. So we are possibly near the very end of the whole move, right? So if that is the case, then the whole correction may soon be over. That's just one idea, right? Again, do keep in mind WXY correction does not always mean completion. The WXY may complete or may continue as another X followed by a Z in the downward direction, right? So that does not always mean that the whole equation or the whole correction is complete. That's just a strong possibility that yes, maybe the whole correction is complete, right? So with that being said, let's now head over and see this leg down. This is the important part or the point under consideration, which is going to determine why we are trading or why am I trading it the way I'm trading it. So we are going to discuss it now from around 90.5. Let's just quickly head over to the lower time frame. And this is your 90.5 level. I'll just mark it. This is our point of reference. And from here on, I have marked correction, sorry, not correction, impulse in the downward direction. Let me just zoom into it. There it is. This is your impulsive structure in the downward direction. Let me just mark it on the chart. And this is my actual count right now. Now, once we remove everything from screen, we can see that this is the start of the wave 4 here. And what I believe is happening is it's going up for an A, down, and then up. It's a running flat, basically, is what I'm assuming at this point in time. If it really is a running flat, then we will see one more leg down, and that is the reason I have added shorts in this market for the wave 5, right? So if this is the end of the wave 4, the wave 5 should at minimum go lower than 81.805. So that is the reason for the whole idea of adding shorts here, right? And where will the wave 5 go, where we can determine that using multiple different ways. But the main idea here is, let me just actually move it there a little bit and change the color, right? So one of the main ideas we can use here to determine that level is to use the trend line. Now the trend line low is coming very wide target or very big target. Actually, it's coming somewhere around 79.8, let's just say 80 and lower level. So the trend line is suggesting that this market can go as low as 80 or lower. So that's just one of the ways of determining the target. The another scenario would be to use the wave 5 projection by measuring the length of wave 1, which again is coming very small. So there is no clear way here. What I'll say is basically I'm just waiting for at least the minimum target to be taken out, and then I'll recount the waves and see if I can determine it using the internal structures. So not going too much detailed into target. If you really want, just draw the trend lines and use your trend line low as a possible target. Again, that's just a possible, right? So that's about it for our discussion on gold. Sorry, not gold, crude oil, and the reason for entering the short trades and the targets and the whole process and everything. Let's now head over to the chart of gold. There it is. Yes, I have been waiting actually for this market to break this trend line. So one interesting thing here is, yes, we are discussing gold. Yes, sure, we are discussing gold. So what interesting thing which I found here was, one second. So let's begin with this discussion from the very start here, right? Keeping in context of what we discussed last time. If you guys recall or joined the webinar last time, we were able to capture this whole leg down, and I actually did pull multiple shots from here to here. So I was able to capture a big part of this move as well. We showed up the trades from live Slack, etc., etc. And after that, what I was really doing was I was waiting after drawing this blue trend line. Why was I waiting? The idea was that I was waiting for this A, B, C flat kind of correction. And the idea was that once the market takes out this trend line and then reverses back down, like back inside the trend line, this region, this shaded region, then I'll be interested in shorts. So it has done it during our discussion of this live webinar. So now my trade setup is I'm expecting this market to go lower. Again, this is just an expectation. If it behaves in accordance with that expectation, then we'll be taking the trade, otherwise not, right? So the expectation is that the market can go up a little bit or more, and then it can reverse here. And the idea is that I'll be looking for selling it around 1814 or lower levels, right? I might enter shorts beforehand as well, but that really depends on how much clearly I'm able to see this market in real time. So right now the idea is I'll wait for the market, wait for it to take out my alert line, not alert line, the alert level actually, which is around 1815.35. If it does that nice and clean, that is, it's working, let's say, like an impulse, then I'll be very interested in taking sell trades here. If the market goes too much in the upward direction, then I might have to relegate this count. That is, we do not expect the wave 4 to fly above 1858, right? Even 1858 is a very big target for a wave 4, for the wave 4 here, right? So my idea is that if it reverses somewhere between this level or within this box, which is between the range of, let's say, 1830 to the level of 1847, then I am interested in continuing my analysis as is and looking for sell either near 1847 if it's clear enough, or near the lows, whichever is the more clearer. I'll take that setup. Right. So that's about it for my idea on gold. Right now, I do not have any position on gold. Hopefully, that's clear enough to all of you guys. Let me know if you have any doubts or questions in regards to this particular chart. And what I'll do is I'm actually checking my crude trade. I added some more short here. So, anyways, yes, as I was saying, if you are clear, that's nice. It will be nice if you can type it in the comments. And in any case, I'll just move on to the chart of S&P. And before moving the chart of S&P to the chart of S&P, again, I'll just like to make a request here that if you are enjoying the content and finding it of benefit, then definitely join our YouTube channel, or I mean, subscribe our YouTube channel, and also share this content, share this video with your friends, colleagues, and whoever else is into trading and you believe might find it of use, right? So that will be very, very helpful and very much required, because at this point, as I keep saying, we have done 83 of these webinars. This is the 83rd, and the following hasn't really picked on as much as I would have liked to see, or as I have seen with other people who do webinars and such content. Given the fact that I've been doing it for 7, 8 years, something like that, and have a industry leading track record, I really couldn't figure out why. But anyways, that being said, I'll just move on to the announcement for those of you who have joined the webinar later on. So here is the small announcement. We will be conducting a private webinar tomorrow discussing how I achieved 50% returns in about 3 months' time. On the current account I'm handling, we will be checking the broker statements and everything in detail, analyzing, etc. Right, and also I'll be announcing the start of the new training program LT batch, which is the private classes tomorrow. So if you are interested in checking out how I was able to achieve it, the profits, etc., and checking the actual numbers, the dollar values, you can register here by visiting 50eyes.com/webinar-registration. I'll also put the link in the YouTube video's description. Right. That being said, let's head over to our next chart. Let me have a very quick look on crude because I have a running position on it. It looks to be working fine. So let's now head over to our chart of S&P and see what's what. I think I have a position left still on S&P. And it isn't really moving as expected. I might have to book it. Let's see. So S&P's 500. Where is that? Yes. So let's have a quick look on the chart of S&P and discuss the current position I have. So the current chart of S&P, let's just quickly run down the analysis from this point of reference, which is the price level around 4520 is our point of reference. Right, from this point, we will be discussing the downward movement. And thank you, Louis, for the confirmation there. So we'll be discussing the downward movement here as an impulse. And I had added shorts because my view was that this market was heading down as an ending diagonal, which was basically the starting point is here of the ending diagonal. And I'll just draw the rough structure. So ending diagonal will look something like this. So if you draw the trend lines around it, they will look like this. So and now let's check it on the real chart. This is what, let me just draw it with yellow. This is what my idea was that this market is doing. It is still perfectly valid unless it really does close above 4271. Only then we will be saying like it's not really doing things as we thought it would. Until then, it's perfectly valid idea. So what I'll do is quickly put another alert there because it isn't really moving as expected. I'll just tell you what I mean once the alert is pushed. So now coming back to the analysis, while this market is still behaving inside or moving inside the trend lines, this sharp movement is generally not expected. Of course, it can happen, but it's generally not expected. So this is the one which is causing a little bit of or is a little bit of a cautionary sign here. And so I'll be tracking it closely. I probably should put an stop loss on this counter as well, maybe. But since I'm observing it live on screen, I think it's going to be fine. I can just take off the position if it goes above 4270. The reason for reporting two alerts is that sometimes the notification may be delayed a little bit. So stack up the alerts. Now, coming back to the analysis, as I was saying, the primary analysis is that from this point of reference, 4520, we have an impulse in the downward direction. This is the count for the impulse. Pretty clear, I would say. Not much to explain here. What you need to do is focus on the orange numbering here. And you can see here that the count starts with a 1 down, 2 up, and then 3 down, and then a 4 up. Now, at the end, as I discussed, we have an ending diagonal. And as I discussed, the ending diagonal will have a structure with 5 waves inside of it. The first leg, the second leg, the third, and the fourth are complete. My shorts were entered for the fifth leg. In theory and in practice, it should take out the low, which is coming around the price of 4204, roughly speaking. So in this is the expectation with which I had entered the shorts, that it should go at least to 4204 or lower. And as I said, it should not really go higher than 4272, or let's just say even 4270. That will be a sign that either this market is doing something else or my analysis is wrong. Right. So that's our main analysis and the reason for entries into the market. Let's look at some other scenarios here. The secondary scenario is that this whole structure is still continuing as a 4. Now, I'm not much of a fan of that hypothesis. It's low probability because if this market really has found the 3 here and if this is really going for a 4, then this 4 is very much out of proportion time wise compared to this 2. It's already out of proportion, uh, but 4s generally are that much, right? If we consider the 4 here, then that isn't that much out of proportion. 2 or 2.5 times, maybe 2.5 times. But if we consider this as the 4, then that's a bit too much to ask, right? So I'm not in alignment with that count. I don't think that's the main idea I should be playing. So for that reason alone, I'll look for exit if the market goes above 4270, right? So that's about it for my idea on S&P's 500. And yes, if the market does perform as I was thinking, that is, it does go lower, right, and then starts to go above this trend line, then I'll be interested in taking longs. Again, keep in mind, I'm saying if it goes low first, completes the diagonal, right, completes the ending diagonal, which I'm thinking, and then establishes itself above the trend line, above this red trend line. Let me just draw it with yellow color. Above this red trend line, if the price goes above it and then sustains above it, then I'll be interested in long entries on this counter. Otherwise, not. And let me have a quick look at crude again. Well, it is very near to our minimum expectation. Probably should take out partial, or I'll just let it run. I have to be quick, by the way. So what I'll do is I'll just head over to our next chart of Nifty 50. Well, I have the terminal open on the screen. And before we discuss Nifty again, guys, as you know, I have requested you multiple times in this webinar already that if you are finding the content useful, I request that you share it with your friends, colleagues, or other trading groups where you think people will find it of benefit. that allows us to conduct these webinars more regularly, and that is actually important for sustaining this whole shebang that I'm doing here, right? More audience, or actually more content is equal to more audience, or more audience, vice versa applies. Anyways, you get the point, right? Hit the like, share the content. Sharing is more important, very important. Now let's head over to our chart of Nifty's 50 and discuss what's really happening here. So in the chart of Nifty, I discussed and I remember very clearly the idea was that we were expecting that if the market sustains above it, because last time when we were discussing it was 29th, right? Yeah, it was 29th. So the idea was we were discussing that if the market sustains above this trend line, let me show it with the yellow color, above this red trend line, then I will be interested in keeping longs or entering longs, right? And when we discussed, the market was here. This was the price action above the trend line. And I said very clearly, you can also again head over to the YouTube channel 50 Eyes Market Analysis, click on the live section and check the 80-second webinar under Nifty. Where is it? There it is, Nifty. Irregular correction. There it is, Nifty analysis. So let me see if I can bring up the trend line somewhere. So you can check it out in your own time. It's just that I'm not able to get the time point where, or timestamp where we were discussing with the trend line and everything. But the idea which we discussed was that if it sustains above the trend line, I'll add longs, otherwise not. Now it did not even sustain above the trend line. It actually gave sell signals here with this sharp leg down and then a continuation to follow, followed by another gap down, right? So what is it really doing here? Now it's a good discussion here, or a good thing to note here is number one, that this market here can still be counted as an A down, B up, and C down. Now the way is that we will consider this as a false trigger, or let's say a trap for longs, for taking some long traders in and letting their stops sit. Or we can go with the secondary hypothesis, which is suggesting that this count is actually indeed a W down, an X up, and a Y down. Now, if this is a W down, X up, and then a Y down, then again, this is complete here, right? In this case, I'm not, 1 second, I had not checked one thing here. Let me check that. So yes, in this case, as I was saying, 1 second, I'm not considering the possibility of it continuing as an X and a Z, because that really isn't required. Now let me just go over each analysis one at a time, otherwise things might get confusing. So let's just say this is our secondary hypothesis. We are considering that the market has completed the whole correction from the point of reference around the price of 20200 or 230, whatever it is, whatever this high is. So if the WXY is complete, then this market is expected to head higher. It may give some corrections here and there. It may correct a little bit and then go up and whatnot, but it will eventually not take out the low. That's the whole idea if this is really a WXY correction. Second idea is the idea of the ABC, which I was previously discussing. We can consider this small move as a false break, and we can consider this as an A down, a B up, and a C down here. I'm not very satisfied with the counts for this wave C. They are actually kind of sort of forced counts, but I'm just considering it as a low probability scenario as well. So in this case, we do not have an H1, let's say. So in this case, if this is an A down, B up, and C down, this could now still be continuing as a wave X sideways. And then it can be followed by a leg down. Again, this is not the best count or best looking count. I'm not saying this is a solid count. So what do I do in a situation where I do not have a very clear conviction of where the market is heading or where the count or what the actual count is? I'll just wait and watch. And I have placed an alert near the high, which is around 19,756. The idea is if the market takes out this level, then it cannot be, it can still be an X, but it's a lower probability. For instance, if it crosses it just like this, like goes up next day with a green candle, this is a green candle, then we will be having an idea that it's most likely not a continuation of a correction, right? Corrections generally are slow, choppy, and sideways. So that will be an idea. That's why I have an alert here, right? So wait and watch on Nifty here, right? If it goes above it, the 19,754, then possibly this market is heading higher and we will consider bullish scenarios, right? On the other hand, if it goes lower and goes back below 19,488, then I'll look for selling opportunities on this counter. One thing to note here, if I just switch to the daily, I'll probably be able to show you. We have an what you will call in candlestick studies an abandoned candle here. Look at this. The fact arises that there is a gap down movement, a candle on the daily chart, and then a gap up. So that makes it an abandoned candle, and this generally is taken as a reversal sign in candlestick terminologies. So that's what you call another plus point for looking for bullish opportunities on this counter. So with that being said, wait and watch on Nifty. Nothing much clear here. And let me see. I think I have gotten a comment here. So Hari is asking, sometimes 3 moves look like 5 and vice versa. How to differentiate? Well, there is no trick solution here. They do look like 3s and sometimes they do look like 5s. That's where expertise, or what you call experience, I should say, comes into play. And as I said, there is really no solution for it. You have to consider multiple factors. For instance, the counts for the global markets. You can also head on to, if you really are that serious, to the chart of SGX Nifty, which they are calling Gift Nifty now, right? And look for some clarity over there, so on and so forth. But as I said, there is no real one-stop solution if you were looking for one. But with experience, I can tell you, you will be able to differentiate a lot easier and a lot more. So with that being said, we are done with our analysis of Nifty. And as always, request that you hit the like button and share the content if you are finding it of use, right? And we'll now head over to our last chart of Bitcoin, BTC. Now, I have to say that this chart has not really been very clear to me on a higher time frame. Yes, on the shorter time frame, I was able to predict this leg partly and then the sell off completely. But overall, I'm not finding it of what you should say is the proper word would be of trade worthy instrument, I would say. Now, what I'll do is I'll just go over the whole count so that everybody is clear on the whole picture. So in BTC, what I think is happening from this point of reference is, which is the price of around 15,480, let's say 15,500. So somewhere around this point of reference, what we have been counting this whole structure was as what second, let me just check that again, 1 2 and then 3 up, 4 down, 5 up. Yes, and that is what we had counted this as an impulse in the upward direction, which completed itself over here. That was the first thing we checked, right? Then we had discussed this as an A down, B up, and then C down. Now the thing is, this is just one of the multiple hypotheses I have. This is just, let's say, H1, right? There's another hypothesis where I'm considering the daily chart and considering this as part of a flat structure. But then again, this also looks out of proportion. So I'll just go with the one which I think is a little bit more likely. So as I was saying, this is the high probability scenario right now. We think we have completed an impulse here, and this is a correction here. Now here comes the issue or the problem. Now if this really is an impulse, let's say one, and this really is a correction, let's say an A down, a B up, and then a C down. Now this leg is just too impulsive for it to be a part of a B wave correction, generally speaking. And this I have seemed to be finding it as a pattern in Bitcoin. It is often performing completely out of proportions and very unclear counts, like very usually, right? So that makes it a little bit harder to figure out the proper trading entries on this counter. Well, that being said, I'm not very happy about this count. So I believe this correction, which started around the price of 31,060, is possibly still continuing. Cannot really get that out, right? If it is still continuing, then you can see and note one thing. It started in April, mid-April almost, 14th April 2023, and it is still continuing. And today is 6th October 2023. So it has continued for quite some time. And that also makes me kind of not very interested in this instrument as such. Now, I'm not saying the range is not big enough, but still, the margins on this thing are very high, at least with my broker. So with that being said, the idea remains that as long as this market is sustaining between this box levels of 31,270 to 25,000, we do not have much of a clarity. The primary idea remains that the wave 2 either is complete here or is still continuing as some sort of complex or whatever, right? So long story short, I'm not much interested in taking any position on this counter unless the market breaks the low or goes near the low, and the alert is at 25,276. At this point, I will assume that it is possibly an A here, and this was a flat, and now this is heading for the C, and will be interested in taking some short-term selling up or sell trades here. That's the only major idea I have in mind if it goes to C. And why? Because if we draw the 50-60 projection or retracement, I should say, it is still not touched at all, right? Now this is not perfect because I'm not able to. I will have to delete a few things here and there. So I'll just give you a rough idea of what I'm really saying. Yeah, that's about it. So as I was saying, it has not touched the 50-60% retracement zone. I'll draw it. There it is. And remove everything. So that makes me a little bit more biased towards the bearish scenario. And that is why I have placed an alert near 25276 and will be interested in some selling opportunities if that level is taken out. On the upside, as I said, it can still continue as a complex, which means that this wave B can become complex, go and break the high at once, then come back again in the range and then eventually take out the high. So that's why on the upside, it will not be a simple, what do you call, clear trade setup, and we will have to see as we go along. Right. With that being said, this does conclude our analysis on all the major instruments. And lastly, again, as I said earlier, if you are finding the content of use, definitely hit the like button and make sure to share it among your friends, colleagues, and other people who will find this kind of content useful, beneficial, right? And lastly, again, those of you who entered late, we will be conducting the private webinar discussing the current account I'm handling and how I was able to achieve this much profits in 3 months. In case you are interested, you can fill in the forms below. This is the private webinar, so you'll have to register and fill in the details, and you will receive the email link for entering the webinar, right? And this will be a very interesting webinar. All the private profit reveals webinars are interesting, and the audience has always found them of benefit one way or another. That is my personal feedback from all these webinars which I've done. over the years. Right. With that being said, I'll see you guys in the next webinar, and take care.